I'm here live with Robert Rapier. Robert is a chemical engineer who was part of the energy industry. He's been on all sorts of TV shows like 60 Minutes and History Channel, CNBC, PBS, mainly talking about energy, especially talking about oil, crude oil, and things like that. And today, Robert is feeling very excited. It's the April 20th of 2020. Robert, first of all, how are you doing today?
It feels like I've been running a marathon ever since I got up this morning. I feel like I've just worked out, really. It's just adrenaline all day. So much correspondence, trying to keep up with what's going on today. Lots of emails, phone calls, just kind of watching what's happening. I rushed out a Forbes article today, and the market was changing so fast that I kept having to update it even as I was writing it. And eventually, at the end, I've had oil prices at 99 cents. Well, they closed down more than $37. So that's how quickly things moved today.
So what was strange about today, Robert? Why don't you just tell us, I've got friends on Facebook, what was strange about today, April 20th, 2020?
So the biggest thing is that, all right, so if we go back to what the COVID-19 pandemic has done, it has destroyed a tremendous amount of demand. And even when that happened, Russia decided, they didn't want to cooperate with more production cuts. And so they decided to have a price war, them and Saudi Arabia. And that took oil prices down from about the 50s down to the 20s. And we've been hovering around, $20 to $30 for a while. But they finally decided, okay, we're going to play ball and we're going to go ahead and cut production. Trump helped engineer a 10 million barrel a day production cut between Saudi, Russia, and the U.S. And the problem is they agreed to cut 10 million barrels a day. Estimates are COVID has cut global demand by about 30 million barrels a day. So even in the face of a 10 million barrel a day cut, I said at the time, that's not going to be enough. That's just a drop in the bucket. And so what's happening right now is the May contract for WTI expires tomorrow at the end of the trading day. And you have people panicking because there is absolutely no storage for oil. And so these traders who bought oil contracts are desperate to unload them because they don't want to have to take physical delivery of that oil. And so that's what's happening. You're seeing panic selling here. And after tomorrow, we're going to see another really volatile day tomorrow. May see some recovery. I mean, there may be a lot of people swoop in here and say, yeah, I'll take oil, if you're going to pay me $37, I'll find a place to store it. So there may be a little recovery tomorrow. And then on Wednesday, prices will return to something like normal, the new normal. The June contract, I think, was still at $20 or $22 when the market closed today. But what's going to happen is, unless we see demand really recover, you're going to see the June contract start to erode over the month. And if things don't get a lot better between now and by the time the June contract closes, close to the end of May, you're going to see another price collapse. But what we will see by the end of the week, you'll see prices sort of back to normal, but this new normal. And I don't see oil prices bouncing back enough over the over the course of the next, or demand bouncing back enough over the course of the next month to really have much of an impact on prices. I think we're going to see prices continue to erode. I think we may see a repeat of this a month from now.
So I always am interested in things like the worst case scenario. So not saying this is what you believe or anything. I mean, you don't even have to say, I believe this might happen. What is the worst case scenario from what you're seeing going on? I mean, there must be people talking about this. What's the worst case scenario?
Yeah, the worst case scenario, just from the oil market standpoint, I'll talk about oil markets. I mean, there's a lot of worst case scenarios out there encompassing the whole market and public health. The worst case scenario in the oil markets are that the entire U.S. shale industry is destroyed. And we could see that. There's nobody making money at $20 oil, but guys with the deep pockets, the Chevrons and the ConocoPhillips and those guys, they can withstand this, but most of the shale producers can't. And so a year from now, we could see half the oil production in the U.S. gone. And then if we do, come out of this pandemic, we may see that, we are once again, beholden to Saudi Arabia for our oil. And that's the real risk here that I see. Some of these guys that have really leveraged a lot, they deserve to go bankrupt. They should go bankrupt. But if we let that, there's a sentiment here that these guys deserve it. They produce oil and it's dirty and polluting, and say that's fine, but you've got to think about what is really going to happen. What's really going to happen is if you wipe the whole U.S. oil industry out, and we are not ready for the whole country to be driving around electric vehicles, then the real ramifications of that are we hand all the power back to Saudi Arabia, which is where it was, 15 years ago. We were importing 14 million barrels a day and making Saudi Arabia and Venezuela and Russia rich in the process. And that situation in the last 15 years has really turned around, and we risk going right back to that.
So, hey, Greg, can you mute your mic there, please? So let me tell you a little story. We used to go to those ASPO conferences, Association
Right.
Study of Peak Oil. And I remember going to the one in Denver and Houston and Washington, D.C. And somewhere in there, I don't know, it was 2007 or something, the price of oil got up to 143 per barrel. And I bought in a contract at 135 or something. Not my best move financially. In fact, my worst move financially. But there must be people that are in these contracts right now. Tell me about, there's several different ways you can be in this, right? So tell me about what each of the different groups is thinking and what's going on in their heads and what are they doing right now?
Well, I think a lot of people, might have seen oil at $15 or $10 and jumped in and said, well, there's not much downside left. But, if you pay $10 for a barrel of oil today, tomorrow you may have to pay $37 to get rid of it. So you could have lost more than 100% of your investment. And I think people who don't understand the physical oil market don't really understand that. A lot of people may not have really understood the risks, and we may see some, ETFs having to be liquidated over this. We saw that in March. We had a number of ETFs that were leveraged that had to be liquidated because they simply couldn't meet, the margin calls once they started to come in, and they just literally have to liquidate the fund. And we could see some of that. So there's those guys. There's the oil producers. Somebody asked me today, well, why on earth would an oil producer pay to have somebody take their oil away? Well, because it can be more expensive to shut those wells down and not be able to bring them back online. So they're looking at it, okay, this temporary situation, and I'm out of storage, and if I have to pay somebody to take my oil away, it's better than the alternative. And so that's what's happening now. Places like Western Canadian Select right now is in negative territory. They're average up there. So if you're out of storage and you want to keep oil, you're going to cut as much as you can, but at some point you have to make a decision. Okay, I'm going to sell at a loss here, or I'm going to shut down this well with, it may have really serious ramifications on our implications on the ability to bring that well back up and produce. I will say this, I wrote this on Facebook today, but if you told me 15 years ago, if you said oil prices in 2020 will go zero, you would start raving mad. Now, I don't know if you remember, I presented at several of these ASPO conferences, and I was at the one, I think it was in Denver, where it went to $107 a barrel. And I was saying then, I think it's getting ahead of itself. I don't think we're at peak oil yet, but, I was obviously concerned about the of peak oil, but I was always saying, I think there's a few more years here. And that's before shale came on and really opened up, production by a lot. And that's really what changed everything over the last 15 years. If that hadn't happened, oil prices would have never broken below $100 until now. They still would have broken below $100 now. This pandemic, you cannot take 30 million barrels of demand out of the market and not have a tremendous impact. And that's what we're seeing now. Cut twice as much as they did, and it still wouldn't matter. Ultimately, you're going to fill up with storage, and that's what's happening.
So I'm wondering, I have a couple questions actually. The first one is, isn't there any place that this can be stored? Like, the most important point that I'm so confused about is that, energy is what makes an economy. And in a civilization, energy like oil energy is what allows food to be grown. It's what allows vehicles to move. It's the most useful form of energy. It's not volatile, it's easy to store, it's easy to transport. So it's more valuable than practically anything other than food. I mean, people have to have food. But next to that,
Right.
oil has got to be the most valuable thing in the universe as far as we're concerned, into civilization. So how can it be that oil is, people are paying other people to just take the oil away? I mean, what does that mean for the entire economic system that we are living within?
So there's a complete disconnect here between the actual value of oil and what it does, the work capability that it has, and the market value right now. The delivery point for the contracts is Cushing, Oklahoma. Cushing storage is full. So if you said, I want to buy a contract, you're going to have to take that and you're going to have to move it out of Cushing. And to move Cushing, you're going to have to line up pipeline space. And everybody is wanting to do the same thing that you're wanting to do. And so the pipelines know that. They've got long-term contracts with people. If you just show up and say, I want to move 5,000 barrels of oil, they're going to charge you a pretty steep premium. And then you're going to get it down to Houston. And you have to temporarily store it down there. You have to line up a tanker. And so all these things have costs associated with them. So even though you may be paid, today $36 to take a barrel of oil, you have a lot of costs then that you're going to have to absorb in trying to get that oil out and maybe get it onto a tanker, hang on to it for a period of time, and then maybe a month from now, you can sell that oil back for, right now there's a huge difference in the price of oil that you can take for delivery right now and oil a month from now. So if you could actually go, and I think we'll see the June contract dip pretty quick here when everybody's out of this May contract. I saw the June volume was tremendous today. A lot of people trading on that June contract. But people are going to have this idea. They're going to want, yes, pay me to take your oil, and then I'm going to turn around, I'm going to try to sell it in June. And so we're going to see a lot of oil contracts, being traded in June. And we're going to see people paying oil tankers. The oil tanker rates have gone through the roof. So it's not as simple as, just before my call here, my wife said, hey, one of her friends, we should grab every storage vessel that we have and buy oil. And I said, it's not as easy as that. You've got to take it from Cushing, Oklahoma. You have to get it out of Cushing. How are you going to do that? You've got to take physical delivery of 5,000 barrels of oil and you have to move it. And so you're going to go to a pipeline company and they're going to say, okay, that's fine. We want $10 a barrel to send that down to Houston. And typically it's not nearly that much, but they could probably hold you over a barrel right now. Or you line up a bunch of trucks and they say, the truckers say, business is booming. Everybody wants this. So I would have to charge you, whatever it is to get it down to Houston or to get it somewhere else. And then somebody down there, storage is pretty full down there. You have to pay to store it. So it's not as simple as, just let's lock in this price and we're gonna all get rich, because a lot of people have that same idea. A lot of players who know all the connections already and they know how to do it. Somebody who's never done this before, if they have the idea that I'm gonna jump in here and I'm gonna figure out what to do with the oil, they're probably gonna lose money.
So I have two questions. You can take them in either order. First of all, who is winning today as far as financially winning on these contracts, whether they're betting on them with options, or who's winning? And also, would it be possible for the federal government to do something like the Fed comes in and it buys up all these contracts and it says, okay, we're going to put this in wherever, the Strategic Petroleum Reserve, or we're going to buy up some old salt mine and we're going to put it in the salt mine? So there's two separate ones. Who's winning? What could the government do right now? Because the oil is super valuable, right? So
Right.
what
Yeah, so the short term and long term, we have an immediate short term problem. That's why we saw such an acute move in the price of oil today. Longer term, there are things you can do. If we think this problem is going to persist into the summer, and I think it is, there are certain things like that that can happen. Who's winning right now? Well, anybody that shorted oil is winning. Tanker guys are, I mean, tanker owners are skyrocketing today. I saw it on CNBC earlier. A lot of these guys are up double digits. As you know, they can ask just about whatever they want. If you want to store oil with them out on the water, they can command quite a premium right now. So you know, consumers aren't winning anything yet. They will, if oil prices stay where they're at. Consumers eventually, you know, will be paying under $1 a gallon for gasoline, if depending on what the taxes are in their particular area. But yeah, but the market, the economy overall is not going to win here. I mean, this is going to have a devastating domino effect on the U.S. economy. As long as I mean, if oil prices are low, it's good in general. But if they're falling because we're in a pandemic and nobody is working, that's, you know, that's a bad situation, and that's where we're at.
So what could the government do? Maybe I just missed that.
Well, the Strategic Petroleum Reserve is pretty full right now. So they don't have a lot of places to store it outside of, like you said, they could put in more storage, but that is not a short-term fix. That's a longer-term fix. You know, Trump tried to do, you know, what he could in trying to cut this deal and you know, cut production, but the magnitude of the demand drop, it's way beyond the ability of anybody. It's going to be every man for themselves pretty quick. You know, the strongest survive, and we're going to see a wave of bankruptcies in the U.S. and we're going to see countries get hit really hard here. China, I mean, China's a major importer. They stand to win here if they've got a room to store oil. I mean, if I'm China and I've got the room, I'm buying every May delivery I can. But again, they've got to get it to the market. They've got to get it to Houston. They've got to get it on a tanker. So you know, it's not as simple as people trade oil. They don't want to take physical delivery for the most part. The vast majority of the contracts, they don't want physical delivery. And now tomorrow they're facing the prospect of physical delivery and no storage.
As far as the wells in the U.S., in North Dakota and wherever else, can those be powered down or something for a while so that, you know, because if the oil's being extracted, then you have to store it, but it's already in the ground, it's stored, so to speak. So, I mean, what are the possibilities as far as that is concerned?
I mean, you could slow down production, but if you do that over the lifetime of the well, you're probably going to get less oil back out of the well. If you're slowing down production, you know, you got pressure in the ground and the oil's seeping into places where it shouldn't be, and you can't get it back. So that's the point. You know, if you're you know, producing too much or producing too little, you're probably not getting optimal production over the course of the lifetime of the well. Those are the implications. And you know, if you shut some of these wells down, you know, they've got to be capped, and there's costs associated with that, and you won't necessarily be able to start them back up.
So this brings me back to thinking about the whole fact that oil is such a valuable thing. I mean, you can take your car with a gallon of gas 50 miles. It's 2,000 pounds. You know, you can farm an entire field.
Right.
That's a huge amount of energy. And then taking that oil and making it in petrochemicals for fertilizers and stuff. I mean, what's wrong here? This doesn't make any sense. I mean, the thing that's craziest to me is that oil is a limited thing, right? It's not infinite. It's not like the earth is a hollow ball filled with oil. And so it's a limited thing. And yet we're hoping, you know, our species to continue on this planet for tens of millions or hundreds of millions of years. And so is there anything that could be done? What are people talking about? Is anybody talking about what should be done differently? I mean, should money be based on BTUs of oil or something, or what do you think?
Yeah, I mean, it's again back to, you know, there is a complete and utter disconnect with the what oil can do and fact that we have way, way more right now than people need. I mean, even gold could go to negative value if you suddenly we figured out how to extract it from the oceans for almost nothing, and the world gold markets were completely flooded with cheap gold, and people go, I've got all the gold I can handle. And in fact, there's still more coming online. Anything could go to negative value, and you could go, wow, the underlying value of this is so much more than the physical price, but the physical price depends on those logistical constraints that oil is dealing with right now. So it's an utter disconnect in the market right now. And usually I like disconnects because you can make money when there's a disconnect. And I trade stocks, and I look at companies that think underlying value is not being accurately reflected. And this is one of those situations. But with the pandemic, I have no idea when demand might sort of normalize. I think even into the fall, JP Morgan recently forecast that we're going to have 40% GDP contraction in the second quarter, but then they're projecting that it's going to bounce back really strongly in the third quarter. Who's going to go to a football game in the third quarter? Who's going to get out and go to concerts and go to restaurants? I mean, some people will, but I think a lot of people are going to be really, really cautious about flying and about getting out. And I don't see Disney opening back up. And I think the knock-on effects of the economy are going to go on for a long time and are going to be severe. And I've been advising investors not to try to chase this market down because there's just too much uncertainty here. This is a situation where I don't know if there's truly a disconnect at this point because I don't even know what the fundamentals are. People are, I saw somebody on CNBC earlier say, we've got 20 million barrels of demand offline. Well, I've been reading 30, 35. So we don't even have an idea about what oil demand is right now. We just know that we're filling up storage rapidly. And, would you buy Disney today? Disney, stock went down by about half, but all their parks are closed. So when do their parks open back up? That's not the sum total of what Disney is, but it's there is a variable there that we're not able to pinpoint when that situation is going to resolve itself. And, we could be, I think we're probably going into the worst recession, depression since the Great Depression. I think that's where we're headed. I called this a month ago. I said, this is going to be way worse than 2008. I just, looking at what happened in China, how it shut down the supply chains. And then when cases started picking up here, I said, this is going to really have a devastating impact. And I ran out first week of March, I think, and I got my hair cut really short because I said, and I asked the person cutting my hair, I said, you got people coming in here worried about this? And she said, no, not really. And I said, well, they should be. I said, take it down pretty close because I don't know when I'm going to be back in here again. And a couple of weeks later, they were shut down.
I wish I would have done that. Yeah, I got my trimmers out the other day and got over the ears. Hey, I'm really, really curious. This is on topic, I think, still, but what's kind of the worst case scenario? Again, I think we got to, I have fire insurance on the house, right? Because right. I know that's the worst case scenario. And I have insurance on my car, even though I don't go a lot of places because I know somebody might run into me. So, but what's the worst case scenario that you could see as far as the food supply in the U.S.? I know there's already a bunch of issues with trying to match up what the supply was. And then is there any way you can associate that with what's going on in the energy and oil market?
Yeah, so I did interview a corn producer for Forbes a couple of weeks ago, and he told me that they're okay, but in the Midwest where things are pretty spread out, they're not seeing a lot of COVID impact yet. Although he said, I've had a hard time getting a part here and there, and suddenly the commodity prices for corn are getting hit just like oil because between the trade war and 40% of the corn crop goes into ethanol production. Ethanol demand is sharply down, and so you're seeing farmers get ruined. And so there are probably going to be a lot of farmers that out of business over this. I don't think we have a food supply problem yet, but I did go and I planted. My wife's going to wonder what these strange weeds are popping up all over the place because I planted okra and squash all over the place outside. I believe in being cautious. I don't believe in, hyperbole or panicking, but I do believe, like you said, you got homeowners insurance. You don't think you're going to need that, but it's there just in case. And that's what I like to say. I like to try to be prepared. I told my wife in early March, I said, think about if you couldn't leave the house for 3 months, what we don't have here that we would need. And she went out and she got, we do keep supplies here, but when we started thinking about, if we were not able to leave for some period of time, what else would we need? And we went in and we put in some pretty big orders when there was not really an issue. And it wasn't long after that, shortages all over the place.
So I'm sure there's some questions that I'm like, they're not within my frame, right? So what sort of things am I not really thinking about? And what sort of things are you wondering about?
Well, the biggest thing is, since the beginning, I'm a long-term planner, long-term strategic planner. I always think about worst case and how to mitigate against that. And I've thought about a global pandemic for at least 20 years. And I've thought what it would look like and how I would cope with that. And I've always thought more about the survival piece of it. I never thought about as much about the economic impact of it. And that's really where I see some trouble here for us as a country. We're going to see some states embarking on some experiments here where they open up Texas maybe a little bit, and you may see cases start to resurge there. So is that what we're going to see? Are we going to see, a few states open up and you'll see resurgence? They're going to have to clamp back down. We've really got a difficult period ahead of us, and it's an uncertain period. And, I keep telling investors the same thing. When there is so much uncertainty, your best bet is to be very careful. And I've told people again and again, don't chase these energy prices down because we don't know where the bottom is. And when oil was, $30, $40, people saying it's time to buy. I said, I would not buy. I wouldn't buy. I would sit tight. We don't know where the bottom's at. And that's the case with a lot of companies. We don't know where the bottom's at. So what I keep thinking about is, how do we get out of this? And the best possible scenario is that one of these drugs, they find out, well, it is a good treatment, and it's basically curing everybody that gets it. But you're still going to have people not wanting to get it. People are not going to want to end up in the hospital with this, so they have to get the drug. And so I think the chilling effect on the economy is going to linger. It's going to go on for a long time, and I don't know how long. Personally, I don't see myself flying. I will avoid flying. I will avoid crowds. It's like I told my mom, I told my wife, I said, we're going to have to look after ourselves because at some point here in Arizona, they're going to open the economy back up and say, okay, start to return to normal. We're going to have to avoid crowds of people. And people are going to have to do that. They're going to have to look after themselves because, it's a real catch-22. I understand why people are quarantined, but at the same time, that's causing a devastating economic impact. And, that creates its own set of problems. We're digging a deep, deep economic hole right now. So it's really a difficult situation that we're in at the moment. And I just don't know where it ends. And so, I've been telling people, hoard your cash right now because you don't know how long you're going to need it. You don't know if you're going to be out of a job. You don't know, I don't know if the government is going to be able to give everybody money for the next year. There's going to be a lot of pushback against that, but the alternative is we have riots and people just, really, really upset. We got revolution because people are not happy that they're out of work and they can't pay their rent. And so, I try to envision how all these things are playing out. About a week into the shutdown here, we had to get out and do something. And I was looking around and I just told my wife, I said, you never know what's going on here. It looks sort of normal, which, we watched Contagion again the other night, and there's riots and all these things are happening. I said, it's not been like that so far. The other thing I think Contagion got wrong is there wasn't a run on the grocery stores until pretty late in the pandemic. We had a run immediately. I mean, immediately here, people went, oh, wow, toilet paper. Got to get all the toilet paper we can get our hands on. And, certain things got depleted really quickly.
So I see there are a few other people that are on the call. I'm wondering, do any of you do you have a question you want to ask Robert? If so, go ahead and unmute your mic and pose a question.
And I've known some of those people that popped on. I've recognized several names, so I knew some of those guys.
I would like to hear Robert's comments on. I've got an oil lease in South Texas. It's a small royalty because of inherited, distributions, and I renewed that lease last week, and I thought, well, I know they haven't been producing this well, and there's several wells. They haven't been producing them since the oil dropped below 50. So they may have empty storage on site, but wherever, that oil is coming, you would have to truck it. And I think you're just talking about something so immense, it's not a possibility, but I bet there is storage. What do you think?
There's storage in some locations, and anybody that has storage has got to be thinking, I want to get some of these, negative $37 oil prices. And it's like real estate, it's location, location, location. If you've got storage in Montana, but you got to take physical delivery at Cushing, Oklahoma, that really doesn't help you a lot. It's probably going to take you more than $37 a barrel to get that oil up there to, even then, if you could store oil that you basically got for nothing, you'd be okay. But keep in mind, you still got to get it back to a market at some point if you want to sell it, or you got to get it to a refinery or something. So a lot of logistical challenges that shouldn't be underestimated when people are talking about trying to buy oil in this market right
now. Anybody else have a question? Go ahead and just unmute your mic if you have a question.
I have one more quick question. And first of all, I'd like to thank you, Aaron, for arranging this. I'm really liking it. Robert, what do you think this is going to have with respect to affecting, electric, alternative energy? Is there going to be a big push out of this?
So that's a good question. One of the things, I did an interview 3 or 4 weeks ago, and they said, what are the long-term implications here? And I said, well, I have seen a bunch of photos of clear skies over Los Angeles. And I think that picture is going to sort of stick with us after this. And people are going to go, we are all dependent on oil, but it was kind of nice that our skies cleared up for a little bit. So I think there'll be some additional push in the direction of alternatives, but like the ethanol industry, they're getting decimated just like the oil industry is. Utilities in general are some of the safest investments out there, but they've gotten hit hard because demand for utilities is down as people are staying home. They've seen the demand load shift. And so I think the profits for the utilities are going to come in lower. And that will in turn kind of dissuade them from maybe making as many investments in alternatives. So overall, I think this is not helpful. I don't think it's helpful for alternatives. But in the long run, I think the images that we're seeing are we're going to see carbon dioxide in the atmosphere go down this year, maybe for the first time in many, many years. And I think people are going to think about that. And I think it'll help in the long range planning and thinking about where we want to go. But I think the crisis itself, I don't think it's helpful for renewables. It's not helpful for much of anything in the short term.
Right, Robert. What do you hear about nuclear?
Yeah, I've got a friend who is very involved in nuclear. Nuclear to me is a no-brainer from a carbon footprint standpoint. Now, where's it going to go here? If electricity demand, I think electricity demand is going to bounce back. But if electricity demand was depressed for a long period of time, then I think it hurts nuclear. I think China needs more nuclear. They're the world's largest CO2 emitter. I think they need nuclear. They need to be building nuclear. India as well. India needs to be building nuclear. Those guys burn a lot of coal, and I think it would be good to to see that. I think in the U.S. there's so much opposition that it's hard for nuclear to get much traction here. And I think we're going to continue to see that. I think people are going to protest nuclear because they think it's the risk of an accident is too high. And I tell people nuclear is sort of a case of low risk, but really, really high consequence if something goes terribly wrong. I mean, like Fukushima, people are living around there and then suddenly they have to leave their homes forever. Chernobyl, they have to leave their homes forever. So you really need to come up with fail-safe designs. By fail-safe, I mean, if the thing fails, it goes into a safe mode, like a fuse. Too much current goes through a fuse, the fuse melts and the current stops. And until we can say, yes, we have fail-safe designs, it's going to be a really tough sell to put in a lot more nuclear here in the future. I think those are possible. I think we do have fail-safe designs that can be put out there, but just a lot of knee-jerk opposition, I think, to nuclear in the U.S. based on what we've seen in some of these other countries. Some pretty severe consequences in some cases.
Yeah, both of us, I'm sure, have high respect for Japanese engineering. And I still can't believe that they put those pumps, right there on the coast. I mean, yeah, that's where you're getting the water from, but could you have a tsunami? Of course you could. I still can't believe that they did that, because that was the only reason it failed.
Yeah, we underestimate consequences and the risks sometimes. And it's like BP when they blew up their Texas City refinery, and you go, you housed a bunch of contractors right down in the process unit. What exactly were you thinking when you did that? And so it's always easy to look back and go, yeah, this was a very, very bad idea. And that's why we do hazard reviews and HAZOPs and PHAs. And, we're always trying to anticipate those really long, low risk, higher risk, higher consequence options that may not have a very high risk of happening. You got to say, what's the risk? Oh, it's low. What's the consequence? Well, it could mean everybody in the town has to pack up and go. Then you say, okay, we've got to really design that so that never is a possibility.
Hey, Robert, I've got 2 follow-up questions, and then I know we need to let you go because we've been on the line for over a half hour now. So, first one is, you mentioned a little bit about some things that you did earlier. You got a haircut, you bought a bit of food, you planted the yard a bit. I'm curious if there's any other things that you'd like to share that you've done. And then the other one was, if you were the decision maker for the world, maybe someone listens to you, for example, and they do what you say because it makes absolute sense. What would you say? I mean, what would you decide? What would you do? So it's 2 separate questions again.
Right. So the first one is, the things that I'm doing is I've always been, people think I'm a germaphobe. I'm not a germaphobe. I will do things that, might disgust people. I'd gut an animal or dig around in the mud. But what I don't do, I will never touch a public door handle and then touch my face. You'll never, ever see me do that, because I used to work in a microbiology lab. I've tested those surfaces. I know how nasty they are. You will always see me move away from a person who's coughing. So I'm always conscious of that kind of thing. I went to India in 2008 and I traveled around the country and I met a lot of people, and sometimes I could not wash my hands. So I'm shaking hands, and one of the Indians asked me, why do you eat with your left hand? And I said, because that is my clean hand. I know that hand is clean. I don't always eat with my left hand. I'm eating with my left hand because I've shaken 10 people's hands here and there's no place to wash my hands for lunch. So those are the things. I always am very, very conscious of where my hands are and the people around me. So as far as preparations, we're holed up here and trying to wait this thing out, trying not to go in a store for any reason. My wife says, let's run in and get this. So is that an absolute must? Because I've tried to avoid going in any store at all for the past month. Your second question is a lot harder. What would I do if I was the world's decision maker? I think you have to look around and you see how different countries and how different states have approached this and what has worked. And you have to look at really the science behind some of these drugs. Some of these drugs have shown promise and some haven't shown as much promise. But it really, there's not a good answer for how quickly to open the economy back up. You have to look and see what approaches have worked. I mean, there's, 100 different experiments going on right now, and we can see the data, and we can see, whose approach is working and whose isn't. I would like to see some opening of the economy back up. In my own company, I've talked to the CEO about this. I said, look, if we're going to come back to work, I don't want us to have 12 people in a room in a meeting. I think we can do it like this from our office. We can all have a Zoom meeting from the office. We don't have to all be in a room. We need to, for a while, get used to the idea of social distancing. And that I've tried to drill home with people, pay attention, treat your hand like toxic waste if you shook somebody's hand. Wash your hands a lot. I carry hand sanitizer at all times. I have it in my pocket right now. And just be, if you are sick, don't go out. Don't, I will never give my germs to anybody else, because when I feel sick, I'm very conscious of that. I'm not touching my mouth and touching surfaces. I'm not sneezing or coughing around anybody. I'd like to tell, people, you will never get sick from me. And if you shake my hand, your hand is cleaner than it was before you shook it, because I guarantee you my hand was clean when I shook yours, unless I just shook a bunch of people's hands. But yeah, the road ahead is tough, and there's not a blueprint. We're in uncharted territories here, uncharted waters here, and we just got to muddle our way through, and hopefully keep the casualties, to the lowest number we can.
All right, well, I want to thank you very much, Robert, for being on the line with us today. And my plan is to upload this to YouTube today. It'll be on the Local Future channel. And thank you so much for joining me and joining us today.
Absolutely. Just send me a link and I'll put it up on Facebook.
Yeah,
Sounds
thanks,
great.
guys.
All right. Thanks, everybody.
Bye-bye.